Hello everyone, and welcome to Wake Up with Nikolai. I am a financial accountant for a Mid-Atlantic regional financial services company, and today we will be talking about FDIC insurance coverage for LLCs, partnerships, and corporations. Many individuals like to start their own businesses, be it a corporation, an LLC, or a partnership. And if you do a simple Google search, you'll find many different steps on how to accomplish this goal. But what I find, and the steps that are most often overlooked or are not prioritized, is the setup of accounting and banking needs. And as you can see, many times this step is one of the last steps to accomplish, but I would strongly disagree that this step should be one of the first steps on figuring out what kind of banking your company will need. The Federal Deposits Insurance Corporation, or short FDIC, is an agency of the United States government, and the purpose of this independent agency is to protect depositors of insured banks against any losses from a failed bank. On this slide, you can see that FDIC has defined the following ownership categories, under which an insured coverage of $250,000 exists at one insured bank. FDIC has also further defined the type of accounts or items that can be insured under each of these ownership categories. For example, you could have a checking account, a savings account, a time deposit, or, for example, a cashier check fall under the joint account. But you could also have similar types of categories fall under the corporation, partnership, or unincorporated association account ownership category. And this is the category we're going to be focusing on today. As you start forming an LLC, corporation, or a partnership, it is important to remember and think forward on what type of accounts you will need, or what kind of business banking needs you will have. All deposits owned by an LLC, corporation, or partnership at the same bank are combined and insured together up to $250,000. So, for example, if your organization, LLC, has grown and it has a checking account of $150,000, and then it also has a certificate of deposit of $200,000, but our total insured is only $250,000 for that particular bank, which means your LLC can potentially have uninsured deposits of $100,000. It is important to note that a sole proprietorship does not equal an LLC, corporation, or a partnership category that is FDIC insured, which is an assumption that many individuals make while they start their own business. A sole proprietorship business are insured as a single account deposits of the owner, which means the individuals themselves will combine all of their accounts and the accounts of the sole proprietorship at the same financial institution and will only be insured up to $250,000. And this is a big misconception that many new business owners miss. As a business owner, you need to think large scale of your accounting and banking needs and how to future-proof your growth of your organization. And this is where this whole topic comes in. For FDIC insurance for LLC, corporations, and partnerships, you have to think of Every time your business reaches $250,000, you either have one option, which is any amount over that will be uninsured and you have the risk of losing that money. Two, you have to consider administrative costs, where you'll have an individual go to another institution and open up bank accounts, so that way all of your funds will be insured. Or the last option to consider, and this is why it's important to have the accounting and banking needs as one of the first few steps when starting up your business, is to ask your financial institution if they belong to a CDARS network program. The CDARS network program allows your institution or you to have a relationship with your institution, but it allows the money of your accounts to be deposited with other FDIC insured banks and financial institutions, and that will allow you to have all of your funds FDIC insured, and the risk of losing any money for your LLC, corporation, or partnership is alleviated.